Before Chase, before HSBC, before the Medici or the Rothschilds, before anyone even had a word for interest rate or loan, there was a building in ancient Sumer where something revolutionary was happening. Farmers were depositing grain, merchants were borrowing silver, priests were keeping records on clay tablets, and without realizing it, they were inventing the entire infrastructure of modern finance. The world's first banks weren't banks at all, they were temples. And the system they created 5,000 years ago is still running your life today. Welcome to the Money Historian, where money, power, and history collide, and nothing is ever as simple as it looks. Around 3500 BCE, in the fertile land between the Tigris and Euphrates rivers, the Sumerians had a problem. Agriculture was booming, cities were growing, trade was expanding, but they had no way to store wealth safely, no way to move it efficiently, and no system for lending or borrowing. If you were a farmer, your wealth was grain sitting in your storehouse, vulnerable to thieves, fire, floods, and rodents. If you were a merchant, you carried silver or copper on dangerous trade routes. If you needed capital to plant next season's crops, you had nowhere to turn except local strongmen, who might demand your land as collateral. The solution came from an unexpected place: the temple. Mesopotamian temples weren't just religious centers. They were massive stone fortresses with walls thick enough to withstand siege, guards to protect valuables, and priests who commanded absolute social authority. If anyone could be trusted to hold your wealth, it was the representatives of the gods. So people started bringing their surplus to the temples: grain, silver, copper, wool, dates. The priests would accept the deposit, record it on a clay tablet, and store it in secured vaults. In exchange, you got a receipt. You could return any time, present your tablet, and withdraw what you'd deposited. This was the birth of banking, not as a business, but as a sacred duty. And it worked because of one critical ingredient: trust. You trusted the temple because the priests answered to the gods. And the gods, everyone believed, would punish theft or dishonesty. That divine guarantee made the temple the most trusted institution in society, more trusted than kings, more trusted than merchants. The temple became the vault of civilization. But the priests quickly realized something. If farmers deposit grain at harvest and withdraw it gradually over the year, there's always surplus sitting in the vault. If merchants leave silver in storage while they're on trade journeys, that silver is just sitting idle. Why not put it to work? So they started making loans. A farmer needs seed for planting. The temple lends grain, and the farmer repays after harvest with interest. A merchant needs silver for a trade expedition. The temple provides it, and the merchant repays with a share of the profits. This wasn't charity. This was the birth of credit. And here's where it gets interesting. Interest rates. The Sumerians calculated interest with precision that would make modern accountants jealous. The standard rate for grain loans was typically 33% annually because grain could spoil, and storage had costs. Silver loans were cheaper, around 20%, because silver didn't deteriorate. These weren't arbitrary numbers. They were carefully calibrated to reflect risk, storage costs, and opportunity. The Sumerians had discovered something fundamental. Money has a time value. Capital today is worth more than capital tomorrow because it can be invested and grow. Modern finance calls this the time value of money. Mesopotamia invented it 5,000 years ago. The temples also pioneered something else: record keeping at scale. Every transaction was recorded on clay tablets using cuneiform script: who deposited what, who borrowed how much, what the terms were, when repayment was due. Thousands of these tablets survive today, and they read like ancient spreadsheets. Archaeologists have found loan contracts, deposit receipts, interest calculations, and even bankruptcy proceedings. The Sumerians weren't just doing banking, they were documenting it with bureaucratic precision. They understood something that modern financial systems still depend on: credit only works if you can track it. But temples weren't just lenders, they became central clearinghouses for the entire economy. If you owed a debt to someone, you could settle it through the temple without physically moving goods or silver. The temple would deduct from your account and credit theirs. This was the world's first payment system, the ancient version of wire transfers. Trade could happen faster, more securely, and across greater distances because the temple acted as a trusted intermediary. Money was becoming abstract, a number on a tablet rather than a physical object you had to carry and guard. The temples also discovered fractional reserve banking, though they didn't have a name for it. They realized they didn't need to keep 100% of deposits in the vault. Most depositors wouldn't withdraw everything at once. So the temple could lend out more than it actually held in reserve, creating credit that exceeded the physical money supply. This multiplied the amount of capital available in the economy, fueling trade, construction, and expansion. Of course, this also created risk. If too many depositors demanded their money at once, the temple couldn't pay. The world's first bank runs happened in Mesopotamia when temples overextended themselves and couldn't meet withdrawals. And here's the uncomfortable truth. The temples used this financial power to accumulate enormous wealth and influence. They started as neutral custodians, but over time, they became creditors to kings, landowners, and entire city-states. Debts piled up. Farmers who couldn't repay lost their land to the temple. Merchants became dependent on temple loans. The priests, who started as trusted guardians, became financial overlords. Some Mesopotamian kings had to issue periodic debt jubilees, wiping out loans and resetting the system, just to prevent total economic collapse and social revolt. Sound familiar? By 2000 BCE, private banking houses began to emerge, learning from the temple model but operating as profit-driven enterprises. Families like the Ajibi in Babylon became legendary financiers, offering loans, managing estates, and funding trade expeditions. But even these private bankers relied on the infrastructure the temples created: standardized weights, recorded contracts, enforceable debt collection, and social trust and credit relationships. The template was set. Banking would remain fundamentally the same for the next 4,000 years. And that brings us to the uncomfortable modern parallel. Because when you strip away the clay tablets, the cuneiform script, and the priests in robes, Mesopotamian temple banking is identical to the system we use today. You deposit money in a bank. The bank lends most of it out. You trust the bank because of regulation and deposit insurance instead of divine authority. Interest rates are calculated based on risk. Transactions are recorded digitally instead of on tablets. Payment systems clear debts without moving physical cash. And banks create credit by lending more than they hold in reserve. Even the problems are the same: over-leverage, bank runs, debt crises, wealth concentration in the hands of financial institutions, the need for periodic resets to prevent systemic collapse. The Mesopotamians dealt with all of it. The 2008 financial crisis. Mesopotamia had versions of that when temples overextended credit and couldn't meet withdrawals. Student loan debt. Mesopotamian farmers faced the same trap when bad harvests meant they couldn't repay and lost their land to temple creditors. Quantitative easing. Mesopotamian kings inflated the silver supply to ease debt burdens. Here's the real lesson. Banking wasn't invented by capitalists or governments. It was invented by religious institutions as a way to manage surplus and serve the community. But once the machinery of credit, interest, and leverage was built, it became a tool of power. And power, even when it starts with good intentions, tends to concentrate. The temples that began as trusted guardians became financial empires. The system that began to help farmers survive between harvests became a mechanism for wealth extraction. We like to think modern banking is sophisticated, rational, and fundamentally different from ancient systems. But the core architecture hasn't changed in 5,000 years. We've added computers, central banks, and complex derivatives. But the foundation is identical. Institutions accept deposits, lend them out at interest, create credit beyond physical reserves, and act as intermediaries for payments. The Sumerians built the blueprint. We're just running on updated software. So the next time you deposit a paycheck, take out a loan, or transfer money digitally, remember, you're participating in a system that predates writing, predates states, predates everything we think of as modern civilization. Banking is older than the pyramids, older than philosophy, older than the wheel, and the priests of Sumer who created it would recognize exactly what's happening in your Chase app today. If this changed how you see money, hit subscribe. History has the answers. I'll show you where to look.